SUGP was trending at some point. This is Wednesday, so this is Thursday, the 8th of January 2026, pre market session. The stock is rapidly gaining traction across trading communities as attention zeroes in on its ultra low float. The float is around 13,000 shares or something like that, combined with what many describe as an enormous short interest. It is huge, more than 100%. A setup that traders often associate with highly asymmetric momentum driven moves. Comparisons are increasingly being drawn to prior explosive runners such as SMX, where constrained supply met aggressive short covering, resulting in sharp multi session rallies. This historical parallel has amplified speculative interest and pushed the stock into the spotlight as a potential short squeeze candidate. And look at what we have here. Okay, so if you want to short the stock, you'll be paying an interest of around 500%, and then there's a daily fee of $91.39. So there's a I don't know if you have if you're aware, if you buy the stock and people yeah, if you buy the stock, this stock has already been sold short. You would actually be making money from you'd be out you would actually be earning, if you like, dividends from the stock, because those shares shorted, these guys they are paying an annualized interest rate of 500%. You do the maths, you find out what that's let's just say maybe 48% of whatever they have sold every month. Yeah, and then there's also $91.39 every day as well. So there's also an incentive to buy the stock. So it's a cycle that keeps on feeding it on itself. Not everybody knows that this is the incentive in buying um, have to borrow and stocks have to borrow stocks and stocks with high daily fees and high interest rates, is that you'll actually make money. You would actually make money from them. But of course, it's risky. Really risky. If you were, for instance, Nvidia that is shorted and has this sort of interest rates and daily fees associated with it, then oh wow, you pack your whole pension in it, because you'll be making money. So yes, there's also that incentive there to buy the stock, but at the same time as well, it's risky. If you buy it as well, you could run into losses, because it's not exactly fundamentally sound. But there's that incentive there. So I mean, apart from the fact that they have also locked up money in there, they are equally paid. That money is actually being paid out. It's not a this is not a case of the regular short interest. When it's shorted, there's nothing. They if nothing comes out of it. They don't pay any fee or anything like that. They always pay interest rates. Every stock is short, you pay interest rates in it. So yeah, but this is a bit different. We're talking about 500%, and then the daily fee of $91.39. So the entire float has been sold out completely, and those who sold short, keep on lending out what they have borrowed. That's why you have a short interest of over 100%. So yeah, it's a bit like maybe some of these shares are really not there as such, because you could still buy the stock. And let's see now. But at the same time, it's telling you that everything has been sold short, but you can still buy it. You know, so it's complicated. What happens is, yes, there's a way it can happen. There's a way it can happen, because if you short the stock, you already have it. You have it in possession. You can still lend it out again and then again and again and again and again. So it keeps on feeding on itself. But the real thing is actually the initial. If I lend it out to somebody, and then the next person, and on, and let's just say that the shares I sold short is now has gone through 13 other market participants. What is actually the real stock that has been sold short is just the one I initiated. So for, let's assume now that all the people who are responsible for this 104% short interest, that only one person initiated it, then what he or she initiated is actually what is the real shares that were sold short. So the rest of the whole float will still be available for people to buy. I don't know whether this makes sense, but the point I'm trying to make is that yeah, this is what's going on. Yeah, this is what's going on. It's yeah. There's yeah. I'm trying to repeat myself again now. There's also an incentive to even force a short squeeze on the stock, because there's also money to be made apart from the profit you may make, apart from the rally that may arise. You know, yeah. So this is the 4 hour chart. The stock has just been consolidating since late October, and the extrapolation seems to be suggesting that that is what may continue to happen. Projections are currently saying, let's see what we have, $6.39 as of now, but there's ample. It has had projections as high as 15.06 as of the 15th of December. Let's see what we have on its daily chart. The daily chart here as well, consolidation. I mean, well, we're talking about all the way back to April. The stock has just been consolidating, volatile at various points. You can see this huge V expansion. This began on the 4th or 8th of July. 8th of July. How many days? 8th of July, 9th of July, 10th of July. So 3 days of immense expansion. 3 days of immense expansion. Expanded from the lows of around 4.51 and 15.52. Yeah, almost 4x. Almost 4x. And then gradually began to crash back. You know, so those who shorted the stuff from up here, yeah, I don't exactly, I can't exactly say that they made money. They may have made money, if they stay the course from there all the way down to here. But of course they'll be paying for it. Yeah, those who bought at these lows but didn't sell, they will be in profit. They may be in profit. They may be. They'll still be in profits at some stage, but they will also be cashing in on the dividends from the short sellers. So yeah, here on the 4 hour chart, projections are currently saying, beginning from the least, we have 0.1340, 1.11, 2.68, and then 9.7, 11.34, 12.36. So yeah, just be careful with these sort of stocks, and I'll definitely continue to update you. Thank you very much for watching this video.